Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look at gold market as usual. So on Friday, as you can see, corresponding reaction on the gold market on the non-farm payrolls release. So at the first glance, it has the similar reaction as the forex market, as the euro currency in particular, but at the same time, it stands a bit different. The driving factors that push markets across the board down actually has the different impact on different assets. So as euro currency has some inner resources of the growth, such kind of the power of the European Union economy that is rising, and investors are waiting for when the European Central Bank will start to normalize their policy. Gold market doesn't have such issues. So it has the indirect relation to inflation and to the interest rates. While inflation is growing and interest rates are low, if the Fed policy is dovish, that is just the very good atmosphere for the gold market. This is the major source of the growth. But as soon as the Fed starts to make the policy more hawkish and turning to the rising rates, well, that starts to press on the gold market. This is not a good sign. Another source of the worrying for the gold market is rising interest rates. So as you see, and yesterday we have talked about it in a fundamental part of our analysis on the forex market, but here on the gold market we'll also keep an eye on the United States Treasury bonds, and you can see that the 10-year notes has risen to the new highs around 2.8%. So in a nearest perspective, we see that market could reach the 3.3 target within the few months, and ultimately we could calculate the potential target at 4.7. So this and the dynamic of the interest rate, dynamic on the yields of the bonds right now stands very fast. So the changes of the yield stands really fast. And as gold is not bearing, doesn't bring any return, it doesn't bring any yield. So it feels the pressure from the rival from the bond market. And the more strict Fed policy, so that trying to hold inflation at the acceptable levels, it doesn't let them to grow without any control. So that is two major factors as the headwinds for the gold market. At the same time, rising yields also pressing on the stock market, and you can see the collapse that has happened on Friday. That's understandable because rising yields makes more expensive borrowing costs for the companies when they need to finance their operations. Even for the traders, for investors, for the funds who that finance their operations on the stock market with some borrowing capital or using the leverage or something of that sort. So that also presses on the stock market. And this, in turn, could provide some temporal support for the gold because investors, when they see the stock market starts to turn down, they could take some profit, extract some assets, and put them on hold in the gold market. So, but anyway, the factors that we see right now has more impact on the gold market. It has tight relation with the interest rates compared to the currencies, because every currency has some inner advantages or disadvantages, some inner sources of the growth, as, for example, as the euro currency, as I said, while the gold market doesn't have such issues. So that's why you can see the reaction still is a bit different compared to the forex market. While the euro has dropped initially, but has returned back up and closed out mostly on the pre-non-farm payrolls levels, gold market has closed mostly on the bottom. What does it mean from the technical point of view? So take a look on the daily chart. Trend has turned bearish. After the doubling of the harmonic swing here, market has tried to reestablish upward action, But this reversal down indicates the inability of the market to do this. So this very important drop, and it indicates inability of the market to establish bullish trend, and it hints on deeper retracement. So most probable the next target will be somewhere around 1316, 1311 confidence support. That's what we could suggest from the daily picture. At the same time, currently, take a look, guys. The market stands at the confidence support. That's why downward action maybe will start not directly right on Monday, but after minor intraday bounce out from the confidence, and then market could reestablish downward action. So on the 4-hour time frame chart, you could recognize a kind of the hand-shoulders shape or something of that sort. But anyway, we're mostly caring about this ABCD pattern. So target of this ABCD points on the 1390 area. Also here we have our minor ABC top that we have talked about in last week. And XOP target 1618 extension also stands in the same area. So that will be probably the target for a common week, maybe for a couple of weeks. So 1390 should be next destination point. At the same time, as we said, market stands at the confidence support right now on the daily, and also it has completed from the same minor ABCD, take a look, it's completed OP target. So it has dropped slightly lower, but that was mostly due to the non-farm payrolls pressure. But still, it's coiling around this target, and this strength of the support could provide some push for a market higher on the Monday, so some intraday retracement could happen. Most probable destination of this retracement seems around 1340 area, because this is confidence support, this is the middle of the dropping, thrusting action, and also this approximately this previous lows. So market could retest this area, the 1340 area. Potentially, it could also climb even to the weekly pivot resistance one in 1350 area, but this possibility looks less probable. It's more probable is just retesting of this resistance. So also you can see will be the trend line has been broken. On Friday we have talked about it. If you remember, this was some kind of the triangle. This was the failure breakout. Market went back down on the farm parallel and shows opposite breakout here. And that will also be the trend line of this action, and it could be retested by the market. So if you are looking for taking the short position on the gold market, keep an eye on the 1340 confidence resistance. This will be probably most probable area where market could turn down. As well as we could get kind of the A, B, C bottom XOP target somewhere in this area probably. So let's check this out. So P will be, so OP stands around monthly in weekly pivots, while XOP will be, I suggest really around this confidence, slightly higher, 1343. So it'll be XOP, 1342 is the confidence resistance. So just $1 difference with this target. So we could treat it mostly as agreement in an area where a market could turn down in a continuation of the daily performance to the downside. So that is what we see right now on the gold market. Although our long-term scenario and bullish setup mostly stands intact, yet in the shorter-term perspective, deeper retracement really could happen. That mostly corresponds to what we have estimated recently in a forex market as well. So as you can see, a lot of market and a lot of currencies across the board also give the hint on the possible drop. So on the New Zealand dollar, we have the double repo sell. On euro currency, we also suggest upward action, but it will be temporal, and after that we expect also the reversal down. So let's see how it will develop.